Yes, so as you've heard by the reports that indeed this is the new plan from the government, from the finance ministry. We're sure we get more update on that. But we've been joined on Zoom by a financial management consultant, Tachie Djan, to give us some update with regards to what this really means from government perspective and its impact on the financial market. Good afternoon, Christian. It's good to have you on Metro Business Week.
Good afternoon, Winston. Thanks for having me on your program once again.
Great. If you could give us a bit highlight on, let's begin with first the domestic debt exchange with regards to the CD-denominated currency or bonds before we jump into that which government intends to do. So far, per your assessment, how will you rate the restructuring of the CD-denominated bonds before we move to the dollar one?
It's been going well. Government started this somewhere last year. It was supposed to have ended by 31st December. There was a bit of an extension which dropped to about February ending, and we had about 85% participation rate, which and in the ratings of the IMF, it's actually a very good measure for some of these things that they are doing. Looking at the 85% that Ghana actually chalked, it was something very good. And subsequent to that, the IMF actually came in with their support. There's been the first tranche of disbursement. That's about 600 million. That's already been disbursed. It's been utilized assiduously. And if you look at the whole program, all the funds that are coming in are going to come in tranches. And so having to cast your minds to how our economy was before this domestic debt exchange program and subsequent IMF coming in, and now there's been tremendous improvements in it. If you look at inflation rate, though in the last 2 months we say it's inched up a bit, but as compared to how inflation rate was as at last year, as compared to this time, it's doing much better now. Our CD to dollar rates that was hitting about 16 Ghana cedis before the end of the year. As at now, we are doing about 11 on the average, and it's been very stable. So as far as the businessman is concerned, he's able to plan very well with the finances as far as the USD is concerned. So generally, the economy is seeing an upturn, and things that were happening before the end of year, it's now being brought to check, and we are beginning to see the impact of the whole domestic debt exchange program and the intervention of the IMF. Let me be quick to add that the program is going to run for 3 years, and so it wasn't a one-off transaction that was going to happen. So far as the IMF remains here, there are going to be series of other measures that are going to be introduced. We're done with the domestic one. Now, very soon, we'll be moving on. I mean, we're done with the CD-denominated one under the domestic debt exchange program. Now we'll be moving on to the dollar-denominated category of the same domestic debt exchange program. All of these are geared towards having public financing that is sustainable. I mean, so far as we continue to borrow from other institutions, including the IMF support that is coming in, we need to bring our debt levels to sustainable degrees. And so it's been going well. It's been going well, and we know that
Christian,
this one is going to be.
Now you've given us clarity with regards to what the CD denominated bonds look like. But this time around, help us clarify, when we say the dollar denominated bonds, what are they and which categories do they fall in?
Yes, so with the government securities, they got though they are all domestic programs, there's the CD denominated and there's a dollar denominated. Investors, once they are approached or made available to know what government security avenues are available, there's a CD one and there's a dollar one. So some opted for the CD, which is what was completed in February. However, there are others who bought into the government's dollar-denominated bonds. They hadn't been touched, or nothing had been heard of that transaction. So this is what the government is actually trying to bring to the limelight, that those who purchase its short-term securities under those bonds are the ones that are going to be tackled now. That is, those who purchase the CD-denominated version of its securities that are actually floated.
Do individuals kind of have these kinds of bonds, just as was expressed in the CD terms earlier, because we know already the voice of the individual and pensioner bondholders. Do we have the same category of persons in the dollar sector?
Absolutely, absolutely. It takes the same form as the CD denominated. So there are individuals, and under the individuals, you could have, I mean, those who are, let's say, pension aged attainers. And so we can anticipate that there will be some pension people that have also got their bonds in them. There are also some institutions, limited liability companies, some are even foreign companies that are holding these funds in government treasuries or government securities. We are expecting about $809 million. That is a component of the dollar-denominated investment that the government was actually holding domestically in the country. So government has targeted about 85%, just like it did attain for the domestic debt exchange with the CD denominated. Government is targeting again 85% of these bondholders to tender it in for more liquid bonds this time round. And the figure is around 809 million US dollars.
Christian, we know the dollar is subjected to global financial risks, especially when the U.S. adjusts its interest rate, when the price of oil or commodities begins to deflate or inflate. We all know the direct trickle down on the dollar, especially domestically. With those who are holding these bonds and are given quite an extended maturity date in regards to their bond they are holding at the moment, would they also have the impact negatively with regards to the expected interest or coupon rate on their amount?
If you look at dollar investment as a test, mostly because of the structure of our economy, CD normally depreciates against the major currencies, including the US dollar, as we are talking about the US dollar now. And so, should you buy $1,000 and you want to just keep it for about a year, you can anticipate that in a year, even if you are not earning any interest on it, the value appreciation resulting from exchange income alone is investment for some people. And so, though the rates as compared to the CD denominated ones are not that high, but in the forex market or US dollar security bond holding, if you are giving just about 1% or 2%, is a lot of money, because as I've indicated earlier, keeping the dollar in itself for about a year is investment in itself, because definitely the CD is going to depreciate against the dollar, so you'll be having more value in terms of the dollar that you are holding. So I don't think they really stand to lose anything.
All right.
The only thing that I see here is the time value of money. As we learn in investment, that is what is going to actually affect them. But as in losing value on their amount that they've actually invested, I don't see it
All right,
happening.
Christian, before I let go of you, help me have some few clarity. The Ghana COCOBOD has also decided to restructure its COCOBOD by ensuring that these short-term securities are exchanged for long-term ones. In this report that the COCOBOD has decided to embark on, there are some few terms that I would like to get your clarity on. They said the aggregate principal amount of the new bonds will be equal to the principal amount of the tendered eligible bills, including the accrued interest payable. What do you make of that and the whole idea of restructuring the COCO bills?
Okay, so let me clarify this Modi, so that we'll all be on the same page, and I can talk about the other one that you asked at first. You see, with interest capitalization, if say you are going to have an interest that is going to accrue, let's say next month, the interest component is $100, and the principal that you invested was actually $10,000 plus the interest that is $100. The capitalized figure now is going to be the 10,000 plus the $100. So we are going to have $10,100 as the new principal. That is what is meant by interest capitalization. So the interest that is accrued that is payable on that particular investment that's been done will be added to the
That's
initial principal, giving it the principal plus interest, making the new principal for you. So that is it with that modus. It's also become important that some government agencies, parastatals, in this case, COCOBOD, they are all, let me say, an offshoot of the government, because though government of Ghana is not giving them any money directly, it is assumed that so far as government had issued, let's say, a sovereign guarantee to support them in their business activity, it is termed as a contingent liability on the government's balance sheet. So government might not have given them money physically, but so far as they've given a guarantee, in this case, a sovereign guarantee, it is part of government's indebtedness, because if they fail to pay the bondholders, the onus lies on government to pay all of those bondholders. So it is classified as contingent liability on the side of government. And so they all fall in line with government's program, where they want to restructure their debts to give public financing a bit of a boost. So ultimately, it is the government of Ghana that is going to pay some of these monies. So it's important that the short-term ones are converted into long-term to give a breathing space to the government. As I've already indicated, it is part of government's books. It forms part of government books as a contingent liability. So definitely, so far as it falls due, government will have to pay for it.
Christian, we are most grateful for your time bringing us more insights on this particular developing story